Imagine a financial guru who saw the housing market's downfall before it hit his back in the game, and this time he's pointing his financial compass towards the stock market. Remember when Burry's name echoed through headlines as the guy who nailed The Big Short before? Well, he's back in the ring, and this time he's been firing off tweets about a potential market crash like a financial oracle. Holding a card deck stacked with negative options on both the S&P 500 and NASDAQ 100, Burry is putting his money where his instincts are. But here's the kicker. He's not just dipping his toes, he's taking a highly leveraged position, with most of his portfolio riding on this daring bet. But he's not alone in his thoughts. Robert Kiyosaki, the brains behind Rich Dad, Poor Dad, has his finger on the pulse too. So a financial genius is at it again, shaking things up and stirring the pot. Burry's making moves, and the market's keeping a close eye on his next steps. Will his predictions come true? Or is this just another twist in the world of high-stakes finance? Let's take a dive deep and dissect the situation. But before we begin, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on amazing and entertaining content. Remember Michael Burry, the investor who famously predicted the housing market meltdown in 2008 as depicted in The Big Short? Well, he's back in the spotlight with some intriguing moves. Burry's not afraid to make bold bets, and this time he's wagering more than a whopping $1.6 billion on a potential Wall Street crash. His recent filings with the Securities Exchange Commission reveal that he's gone bearish on the S&P 500 and NASDAQ 100. How's he doing that? Well, he's purchased put options worth $866 million against an S&P 500 tracking fund and another $739 million against a NASDAQ 100 tracking fund. That's like putting his money on the table and saying, I think things are about to go south. In fact, Burry is going all in on this bet, allocating more than 90% of his portfolio to this market downturn anticipation. He's basically putting his money where his gut feeling is. But here's the twist. Even the sharpest minds can have moments of doubt. Earlier this year, Burry sent out a tweet to his 1.4 million followers that simply said, "Sell." A clear signal, right? Well, not so fast. Just a few months later, he changed his tune, admitting, "I was wrong to say sell." It's like he momentarily had a change of heart. Now let's talk about those market giants, the S&P 500 and the NASDAQ 100. These two have been dancing to a different tune. Despite Burry's bearish outlook, they've managed to score some impressive gains in 2023. The S&P 500 has flexed its muscles, rising nearly 16%, while the NASDAQ 100 has been the star player, soaring by a staggering 38%. It's only down about 4.4% from its peak value in January 2022. Quite the turnaround from October 2022 when it was down a whopping 25%. We've witnessed some exciting twists and turns along the way. The S&P 500 seemed to be in a bit of a slumber for the first few months of 2023. But hey, don't you love those surprise breakthroughs? Well, that's exactly what happened in late May. The S&P 500 woke up from its snooze and embarked on an exciting rally that lasted through July. The big question now is, where is this market headed next? It's like they're playing their own game, heedless of Burry's predictions. This isn't the first time Burry's made waves. He shot to fame for his spot-on bets against the housing market back in the mid-2000s. Those savvy moves led to big bucks during the subprime lending crisis and the financial chaos of 2008. Remember that book, The Big Short, by Michael Lewis? Yep, Burry was one of the main characters, and his role was portrayed by none other than Christian Bale in the movie adaptation. But Burry's recent actions have been just as attention-grabbing. He's been shuffling his deck, stepping away from regional banks like First Republic Bank, Huntington Bank, PacWest, and Western Alliance. And hey, he's also said goodbye to his holdings in Chinese stocks, waving farewell to the likes of JD.com and Alibaba. However, it's not all doom and gloom. Burry's got some upbeat bets in his pocket as well. Around 6% of Scion Asset Management stock holdings are dedicated to bullish positions. In the second quarter, he decided to roll the dice on travel and healthcare, snatching up shares in Expedia Group, MGM Resorts, CVS, and Cigna. It's like he's covering his bases, hedging his bets both ways. Now, while Burry's bullish and bearish maneuvers are both captivating, his bearish calls tend to steal the show. It's like the spotlight shines a little brighter on his negative predictions. And remember, past successes don't guarantee future triumphs, but Burry does have a track record that makes people sit up and take notice. So, whether you're rooting for the bull or the bear, keep your eyes on the market. There's always a twist waiting around the corner. He seems to have taken a considerable chunk of his assets and thrown them into the ring, but the exact price tag on these put options remains a mystery for now. Now, what exactly are these put options? Well, think of them as a financial tool that gives you the power to sell shares at a specific price sometime in the future. It's a move that often signals a cautious or bearish outlook, and it seems Burry has been painting a pretty gloomy picture for a while now, but he's not alone in this game. According to Robert Kiyosaki, the mastermind behind Rich Dad, Poor Dad, there are some other big players lurking in the shadows. Warren Buffett, often referred to as the Oracle of Omaha, is reportedly sitting on the sidelines with a whopping $147 billion parked in short-term treasuries. And then there's Michael Burry, the genius behind The Big Short, who's apparently shorting the market as we speak. Kiyosaki points out that these financial titans are basically gearing up for a stock market plunge, waiting patiently for the right moment to swoop in and grab some bargains. It's like they're poised to strike when the iron is hot. Let's dive a bit deeper into the tactics. Buffett's Berkshire Hathaway has been making some interesting moves lately. They've sold around $8 billion of stocks and eased up on buybacks, resulting in a substantial increase in their cash and treasuries stash. A whopping $147 billion. It's like they're loading up on ammunition, getting ready for potential market turbulence. On the flip side, Burry's Scion Asset Management has spilled the beans on their bearish bets. They've got those put options in place for both the Spider S&P 500 ETF Trust and Invesco QQQ Trust, which track the S&P 500 and NASDAQ 100 indexes respectively. These options mean Burry could stand to make a pretty penny if these indexes take a tumble. Now, while Buffett hasn't explicitly shouted from the rooftops about a market crash, his actions are speaking volumes. He's been selling off stocks left and right, amassing a war chest that's ready to pounce on discounted stocks and strategic acquisitions when the time is right. It's like he's preparing for a financial battlefield, equipped with lessons learned from the Great Recession. So, according to Kiyosaki, the stars seem to be aligning for a potential market downturn. While Buffett might be building his cash reserves and Burry is placing bets against the benchmarks, it's all pointing toward one thing. They both seem to have their radar tuned in to an overheated market that could be heading for a bumpy ride. The stakes are high, the strategies are diverse, and the excitement is palpable as these financial heavyweights make their moves on the global chessboard of investments. Although inflation has come down a bit from its peak in mid-2022, it's still higher than the Fed's desired target of 2%. Meanwhile, the U.S. economy is like a steady ship, moving forward at a deliberate pace. The job market is looking pretty solid, and consumers are flexing their spending muscles, both of which are helping to keep things in the green. Corporate earnings didn't speed through the first and second quarters, but hey, they didn't slow down as dramatically as everyone expected. Sometimes, surprises can be a good thing. Now here's the juicy bit. The U.S. economy has been like a slow-moving glacier, stabilizing itself after a couple of tumultuous years. The big question mark hanging over us is whether this stability will steer us away from recessionary troubles in the second half of 2023 or early 2024. It's like predicting the weather. There are so many factors at play, including inflation, lending rates, job situations, and even how folks like you and me feel about spending. As we wrap up this exhilarating journey through the world of finance, it's clear that Michael Burry's bold moves have everyone's attention. The echoes of his past success resonate as he takes another calculated risk, placing his bets against the stock market giants. But the big question remains, will history repeat itself? Now it's your turn to weigh in. Do you think Burry's onto something big? Or is the market playing by a different set of rules this time? Drop your thoughts in the comments below. If you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Thanks for watching, and we'll see you in the next video.